Hey everyone, welcome to the KE Report and another daily editorial. This time chatting with Dave Erfle. Dave is the founder and editor of the Junior Miner Junky. Now, Dave, I want to talk in a way big picture about what we're seeing in the precious metals stocks and what maybe portfolio management you're considering. And I know you tell us all the time you're already positioned in those stocks that you're happy with, but I'm sure we're all looking at our portfolios here. Everyone that is heavily invested in the precious metal stocks in particular, and they see a lot of winners, and those winners continue to outperform. It just feels like the winners, the stocks that have been breaking out over the last year, continue to break out. But I'm sure we all have at least a few, some people probably more than a few, of these stocks that just can't seem to get some traction. Yeah, they're up from their bottoms, maybe 40, 50, 60%, but they're not two, three times higher like these stocks that have been outperforming. Now, I know this could all just be part of the rotation trade, waiting for money to go further down the food chain. But, Dave, isn't it tempting to sell some of these laggards, even the ones that aren't really up, and just pile more into these stocks that have shown the ability to garner the capital and continue to outperform markets?
Yeah, Corey. I mean, it depends. You have to take these companies on a case by case basis, right? I mean, for example, in my portfolio that I share with my subscribers, we've accumulated these positions in these stocks for the past few years, and several of them are breaking out with the sector and with the gold price, while some of them are still lagging a bit. And like, there's a couple in my portfolio that I'm set to sell as soon as they reach my average cost. They're getting close because basically what the company did was they've issued too many shares, raised capital at too low a price, have too many warrants, what have you. So basically, you have to take these stocks on a company by company basis. You don't just look at the stock and say, wow, this stock hasn't moved yet, and throw away your thesis for getting into it in the first place. If the company's still doing what they were doing when you got into it, the market just hasn't caught up to it yet, then you go ahead and hold on to it. But, like I said, if they issue too many shares, their share structure's blown out, or, their plans changed a little bit on what their vision was for the company, what have you, then yes, go ahead and wait for the stock to get back up to your cost if you think it will. And it looks like it will. I mean, if you take a look at this at the technical chart and it's breaking out of a lower base as opposed to a higher base that a lot of their peers are breaking out of, then like you could do what I'm doing. You could just wait. I've still got about a 20-25% move to go on the upside, which can happen in a hurry in a market like this now that's broken out. So then I will go ahead and sell it. And I've already got a watch list of 20 companies. I've got meetings set up to speak with a few. I got one that I'm speaking with after I get off the phone with you here. So, you set up these meetings, you talk to these companies on your watch list, and you wait for entry points to start getting into those with the money that you're switching out the stock from. I mean, basically, this is be right, sit tight time. If you're like myself and my subscribers that you've been accumulating these stocks for the past few years, and now they're just starting to do what you got into them for to do. Why try to trade in and out? Maybe sell something high to buy something low, or because this move still has a long way to go. This is a breakout of magnificent proportions here. I mean, if you take a look at the GDX, it closed at a 13-year high. It's got a 4.5-year cup and handle that it's breaking out of. And GDXJ, it's moving really quickly towards its COVID high at around 61. And for example, look at today. You've got an overbought GDX and GDXJ gapped up today. And in the morning, they sold down to fill those gaps. And as soon as those gaps were filled, buyers came in. There's buyers on the sideline waiting to get in and move the GDX and GDXJ back up again. And this is happening all before the Federal Reserve is coming out tomorrow to say whatever they're going to say. So we're going to find out tomorrow how much the Fed is priced into this gold rally.
Well, Dave, it seems like the broader topic and kind of the way Corey asked you about it is, should you press your bets with momentum plays that have alpha, because they're doing something with their news that gives them that edge? Or is this a time to look at optionality plays and the catch-up trade and the re-rating trade and a lot of the developers or advanced explorers that have resources defined that maybe haven't moved as much? What are your thoughts on people, you know, pressing their bets on momentum and piling into momentum versus trying to catch a re-rating on a stock that hasn't moved? It kind of ties in with what you were just saying, but is there any nuances there you'd like to discuss?
Well, sure. I mean, it all depends on your risk tolerance, right? I mean, there's several companies, for example, in my top 10 portfolio, they're breaking out of 4 or 5 year bases, high bases, not as opposed to low bases. So they're breaking out either before the sector or with the sector right now. So, I think the highest risk for these companies are for them to come back and test that breakout. And if you got money on the sidelines and you're thinking about switching out, wait for that back test. Absolutely. Because these companies, I still think they have a long way to go. These bases are very strong and they're huge. And you're starting to see them break out with rising volume also. That is investors coming into this sector, and basically we still have yet to see the retail market come into this sector. I mean, the volume still really isn't that high on the GDX and the GDXJ. It's rising, but we haven't seen any volume spikes. So we still got that down the road.
Dave, just to follow up on what you said, where if your thesis changes with some of these stocks, it sounds like maybe one or two of the stocks that you do hold, your thesis has changed. They diluted, they issued too many shares, but you're still waiting for that stock to get back up to your cost basis. Why bother waiting? If the thesis has changed, rotate that money somewhere else.
Well, because, basically not huge positions in my account. I mean, I don't put any more than 5% into one position, so I can afford to wait. I don't like to take losses in bull market, to tell you the truth. So, I don't want to sell something for a loss and then get into something else, and maybe something happens with that company that's already moved up, and they reverse it and they hit me with a loss. That's a double loss. So the object is to make money, especially in a bull market. And now that the sector's broken out, I'm very confident that these two stocks that I want to rotate out of, I'm pretty confident that they're going to reach my cost pretty soon. So I can afford to wait. And like I said, I'll take that time while I'm waiting to do the due diligence on several companies on my watch list to make sure I get into the right ones.
Well, let's take that even a little bit further, Dave. When you're looking at your watch list to see the right ones, are you looking a little further down the food chain now that some of the sector has run? Because we normally see the royalty companies and the bigger producers run first, and then things start filtering down. Some of the better developers have really started to run as well. Are you looking at earlier stage companies now, or just kind of looking for similar companies to replace it with?
Yeah, great question, Chad. That's exactly what I'm doing because, we've talked about this before in the past. When is that point going to come? Or when that point does come, what are you going to do as far as figuring out which stocks you're going to get into because you want to take on a little more risk? Because obviously, investors are taking on a little more risk finally to get into this sector. And that's what we're seeing. The switch has been flipped. So now it behooves you to go ahead and take on a little more risk. And as far as I'm concerned, my portfolio taking on a little more risk means PEA stage companies or even maybe resource stage companies that are about to issue a PEA. Also, copper. I'd like to add one more copper junior. I've only got a couple in my portfolio now, and they're doing very well. So, these are the things that you have to look at as far as, your risk tolerance is concerned, where your portfolio is at now, how many gains you've had already. If maybe you're looking to trim something also that maybe has already tripled and you want to trim it, get your original investment out of it, then you have a risk-free position. And then with that capital, you put it into something higher risk.
Dave, how do you use something like market caps to analyze your positions here? Because I know some people look almost strictly at market caps, and I know people that were trying to play in the smaller market cap companies, the sub $50 million companies last year. And quite frankly, those stocks did not move. The ones that moved were over 50 million and over 100 million. Those started to re-rate. I personally still see a lot of opportunity in those companies that are, let's say, between 100 to 250 million dollar market cap is revaluing another 2 to 3 times higher. But the question also being, are the 15 million dollar market cap companies going to move? So how do you utilize or how do you look at market caps when analyzing these stocks?
Yeah, I look at market caps relative to peers, right? So I look at the company and see what their market cap is in their peer group. If they're undervalued in relation to peers, that's what I like to see. And if they're undervalued in relation to peers and they're in a top tier jurisdiction, that's even better. And if they're undervalued in relation to peers and they've got management that have been taking part in the recent financings and they hold large positions, that's even better. And then you go one more, and they've still got a really tight share structure and they've recently raised money and they didn't have to issue a warrant. I mean, things like this, you look at all these things, but in relation to peers, as far as market cap is what I look at.
Well, Dave, when you're looking at peer companies and you're doing some comparisons, sometimes there's ones like at least when I look at them, that they stick out like a sore thumb to the upside, like they've been already highly valued, and yet that stock will continue to keep running. Kind of to Corey's point that it already looks like it's fully valued, and then it'll go up 30%, 50%, 100% from there, and you're like, okay, well, this is really fully valued, and then it just keeps running. Are some of these stocks going to get to the point where they're just going to get overvalued and stay there?
Yeah, let's look at Snowline, right? I mean, here's a company that's very early stage, very expensive to drill. There's no infrastructure around where where they've made this major discovery, and the stock continues to run. They raise money, and the stock continues to run. So yeah, I mean, you're going to have these instances like this. A Great Bear was another one. Same thing happened there. That stock continued to run. I mean, the general rule was if you're lucky enough, for me, is if you're lucky enough to get into an early stage drill play and the stock gets to $1 billion market cap, I mean, that's pretty much has been the bell for me in the past to get out. But, companies like Snowline, they just keep going.
Oh, Snowline's up over 30% just this month again. So again, look, some of these stocks just continue to outperform. Dave, these development plays. We talk so much about the development plays. Clearly, the producers, they are making money, right? They have no cash constraints. Developers, they still need to raise some money. They still need to get stuff built. How encouraged are you by simply the developers out there, which in all fairness, there are a lot of them right now?
Oh yeah, very much so. Especially, the optionality plays. I mean, one in my portfolio popped 22% yesterday with huge record volume. That is a signal that funds are getting into this stock as they see it as drastically undervalued. So, because some of these companies, they've been de-risking these projects and they've been ignored for so long, but they've done a great job of keeping their share structure relatively tight by raising money at the right times. So, you really got to, sharpen your pencil and make sure you get into the right one. But yes, these stocks are popping one by one.
Dave, when you look at economic studies on the developers, and then you consider where spot pricing is, it's almost hard for the companies to keep up with where the spot price is. So, are you doing your own internal calculations to look at how a project changes with even just $100 move in the price of gold or a $1 or $2 move in the price of silver? Are you looking at how the economics are changing in light of where the trend is?
Yeah, and a lot of these companies are doing that for you on their economic studies. They do a base case model and they do a 2600 gold model, and some are doing now $3,000 gold models also. So they're helping to do that for you.
So, Dave, let's talk about the flip side of this, a potential pullback. Look, all bull markets go through pullbacks, and this market is no different. And you can look at number of different charts, the gold chart, the GDX chart, number of these individual stock charts, and on a daily, weekly, some even monthly basis, they are in oversold territory. That's not a bad thing. That actually signifies that it is a bull market, in my eyes at least. And hey, these things can stay overbought for a while. But what would a normal pullback be? What do you look for when we're going through a pullback that signifies it would be a good time to re-enter or simply enter some of these stocks you're waiting for?
Yeah, that's a great question too. First of all, as far as the gold price is concerned, you take a look at a monthly chart and the RSI is over 80 now. And you look at the chart of the last 25 years in the gold price, and on a monthly basis, you get an RSI over that level, then you're looking for correction time and a pretty decent correction at that. So will it happen post Fed? Will it happen right before the quarter ends? The quarter ends on 2 Mondays from now. The 31st is on a Monday. So we could have, a lot of profit taking some quarter end book squaring, because a lot of profit's been made in this. Yeah, you take a look at basically a if you see 2 sessions in a row of big price losses, I mean, that's a pretty good signal that, hey, we're due for a correction. If you see like a key reversal down on a daily bar chart, you see the gold price go up like $50, $60, and that takes the RSI of the monthly, above 82, 83, and then you have a reversal. That's a pretty good sign that you're moving into a correction. But what I'm really interested to see is, this correction we all know is imminent. It's going to happen. It could happen any day now. So what I'm interested in seeing is because we've got the GDX and GDXJ breaking out over strong, multi-year resistance at 43 in GDX and 54 in GDXJ. I expect those to get back tested, and they're going to get back tested when the gold price finally corrects. What will happen when they get back tested? Will they continue to go lower, or will you see some strong buying come in? And also, you also want to see the leaders in the junior sector. What are they going to do? Because they're, like you said, they're really overbought now and they're due for a correction.
Dave, in the event that the correction causes the pricing just to kind of grind sideways, but not have steep drops in prices on the charts, so more of a correction through time instead of through price, would you adjust your strategy at all versus if there was more of like a crash event where you saw a lot of things go on sale? Because a lot of times when things go on major sale, it's a chance to buy quality on sale. But if things grind sideways, would that change it if it was just correcting through time?
No, no, it wouldn't. I mean, I think that would be more bullish. A stock chart everyone should be paying attention to is Newmont's chart, right? If you take a look at the monthly Newmont chart, it's got an incredibly bullish 2-year inverse head and shoulders pattern. Because looking at Newmont is the first stock that retail is going to get into. It's the most liquid, it's the most high profile, it pays a decent dividend. That's the stock that the herd's going to start going into. And we haven't really seen a spike in volume in Newmont yet, but that chart pattern is very bullish. And Newmont gets above 55, that's where the neckline is for that inverse head and shoulders bottom with rising volume, then it's game on, really game on in the sector.
Dave, on the other side of things, you said that you want to add another copper play to your portfolio. Copper is doing well, almost stealthily, because I think everybody seems to be just distracted by the precious metals prices, rightfully so. Precious metal stocks are doing well. Copper stocks, they're even more a mixed bag right here, where juniors really aren't doing anything. Some of the bigger ones are okay, but again, they're not revaluing the same way that the gold stocks are. What are you looking for in copper plays? Where do you see the best opportunity in the copper stocks?
Yeah, I mean, some of them are. I mean, the one copper junior that I have is doing really well. It's based in the United States. And I've got a couple on my watch list that are based in the United States also. And there's also a couple Canadian ones that I like. A strong PEA was just released by North Isle, and that stock is making all-time highs. So I like companies like that are at the PE stage or right before the PEA stage, especially you got to look at permitting also because I didn't go to PDAC this year, but I know the hot topic was permitting and government. It looks like they're on board to start streamlining these permitting times because it's just taken far too long to get these projects fully permitted. I mean, 15 years in British Columbia is ridiculous. So they're starting to address this. And that's what you want to see. And you want to see the market notice this also. And they are starting to notice it because I've seen a couple of these stocks that have these projects that their permit timelines are a little far out. They were being punished for it before. Now they're being rewarded a little bit as the copper price gets closer to $5 a pound.
Well, Dave, whether it's gold, silver, or copper, I'm still a little surprised that we're not seeing even more M&A than we have seen in all three sectors. Do you think we're going to see it? Because I thought after PDAC and right now there's the Swiss Mining Institute that we would be seeing more deal flow. We've had a lot of M&A over the last year or so, but I kind of expected more. How are you looking at M&A?
Yeah, yeah. I mean, I'm on the same wavelength there, Shad. I mean, it's amazing. I thought for sure at least one or two major deals would come out of those conferences. All we got basically was the Equinox Calibre deal. Nothing since. I mean, I was expecting a couple to be cemented there, and we've got crickets basically coming out of M&A. It's pretty incredible.
It is, but hey, I think that also might just mean this could be a bit of a longer run here. Companies aren't getting desperate, but you would think eventually they'll start buying some of these assets. Maybe a lot of these companies already have assets that they're just looking at bringing online rather than a bigger purchase price. Who knows? It is the one kind of anomaly out there, but we have seen quite a bit of M&A too. It's not like it's completely dead, but after the conferences, it actually has been. So we'll see when that really starts to pick up steam again. But overall, look, these stocks are continuing to do well, and there just seem to still be a lot of good opportunities out there. And I know that big balance of, do you sell the ones that haven't moved, or do you just simply sit and wait for them to move? Not a bad problem to have, although I know we all want just our stocks to go up every day, but a lot of them are. Dave, great chatting with you again. Dave Erfle, founder and editor of the Junior Miner Junky. Click that link in the show notes to follow along with what Dave is doing in terms of his portfolio. Thanks for your time today, Dave.
Thank you, guys. Always a pleasure talking to you.